Welcome back to another week of the Trading Triangle. Hey, Sean, how you doing this week?
Yeah, great, thank you. How are you doing?
Doing well, thank you. And Kay, yourself?
I'm doing great. Happy Sunday.
Awesome. Happy Sunday. Getting ready for prepping for the week of trading, albeit a short week, only 4 days this week. So got a lot to get through, but we'll be an abbreviated session. So keep that in mind when you're looking at options and whatnot this week. Before we get into it, a quick disclaimer: we are not financial professionals. This is not financial advice. Of course, we are three friends here putting together some charts, preparing for trading in the upcoming week, and it is put together for educational and informative purposes only, and entertainment, of course. We try to entertain. So thanks for joining us. As always, be sure to hit the subscribe button and like button. Smash the like, as they say. And yeah, we should just get into it, I think. Anything before I get into it, guys?
Oh,
well,
let's kick it off.
We'll definitely be entertaining. So that's a given.
I mean, that's a given. Week in and week out, right? So no doubt about it. All right, so let's see here. We'll get to the charts. And first up, the reminder, market is closed on the 4th. But let's look at these names from last week. Big performance. I mean, Kay, when we were talking earlier, I was just shocked by some of these numbers in the tech sector specifically. Look at Intel, just blew it out of the water last week along with AMD. We got charts on AMD this week. What else?
I don't know what happened. Like, you had Apple almost 7%.
Yeah, Adobe almost over 9%, pushing 10. So the technology sector just blew up, which is actually good to see.
Yeah, you had ExxonMobil. It's up 5.67% from an energy standpoint. You have Tesla up almost 6%. What a week.
This is a good week.
Good week.
Hopefully you guys had some good trades. You have some good trades last week, Sean, or did you lay kind of low?
Yeah, I had a very green week, so I'm really pleased with that. Well managed, that kind of thing. So yeah, I'm really pleased with this week.
Nice. Yeah, across the board. Oh, what's up?
Did you?
Oh yeah, I did okay, except for I had to close Neo. Sorry to say it, Sean.
Yeah, I did see that on Twitter. I was like, oh, it's okay. Sorry. It's fine, honestly. It's not for everyone.
Well, I was swing trading it, and it hit my levels, and I was trying to hang in, but you got to remain disciplined. Palantir, I was swing trading too, to be honest, and I got stopped out of that. So a couple of small losses. Well, Neo actually was a bigger loss, to be honest, but and it's probably because I was being too stubborn, but. Good week overall. I added to my Savvy Trader portfolio, and it's a small, tight account. So I had to cut Neo. I was actually dreading telling you, but I'll be back in. I know I'll revisit it, no doubt.
It's okay. Don't worry about it.
So markets overall, let's look at this here. We got the fear and greed index creeping back into the greed territory at 56. And let's run down the list, right? S&P was up 2.5%. That puts it a positive 17.6 for the year. The Dow was up 1.4, NASDAQ up 3.25%, so up 34% on the year for technology. That's nice. Russell 2K is what actually caught my eye, guys. The 3.63% on the positive for the week, now up 9%. I keep saying I really want to see small caps participate, and so that was good to see, and keeping up with actually outperforming NASDAQ this week. Bitcoin gave some back, now at about 55% positive on the year, down about 5%, and dropped below 6. So like spiked over 17K, dropped back below 16K. So I was in and out of Marathon Digital there and made a good trade, but gave a little bit back. And then the VIX, look at this number. Okay, what do you make of that? We're at 13. We're going to hit the 12 handle next week?
I mean, if you're going into the extreme greed, yeah, most likely. And then if you look at the 50-day SMA of VIX, it's 1477. So it's lower than your 50-day SMA.
Yeah, right. Below the 50.
And if you look at the put to call ratio, it was 0.93 last week. It's 0.89. So it's getting bullish.
What do you think in this abbreviated week? We're going to get like light trading volume?
Most
September,
likely.
Right? Most likely.
Yeah. And September in general is a down month compared to, a couple other months of the year. So that could play a role. But, with schools opening, and it's the last week before schools open, all across America, right? Some schools. So you may see a lower volume. People will be on vacation. This week might be a drag, I would say.
All right, Kay's saying it might be a bit of you're on the same team, Sean?
Yeah, I think it's only 4 days as well. So
Yeah, so you
to kind of
think it
slow
might be
down.
mellow? I think it might be mellow. I don't know. It'll be tough to see. It seems like a good spot, right? Because we have had such a nice run recently, and so you get a 4-day bit of a rest here. People on holiday in the States, so with the Monday off, with the market closed, so we'll see what happens. Earnings, not a lot going on there. So jumping to the earnings chart, we do have charts or a chart, I should say, on GitLab, which reports Tuesday after close. So,
Yep.
okay, you have that chart, right?
Yeah, I have that chart. Yep.
Nice. And then Wednesday, a couple names that you might be familiar with: C3AI after the close, and then the leader of the meme stock mania, GameStop, which along with AMC has just really taken a hit. So yeah, I'm not too excited honestly about earnings this week, if I'm honest. DocuSign Thursday after the close, another one of those big names from 2020 that has since really just disappeared. And yeah, you guys. I don't think I've ever talked to you guys about DocuSign. Either of you trade that?
Yeah. I used to trade DocuSign a lot, especially when it was like getting gap downs after quarter. So that was a good trade on DocuSign. I kind of also look at ChargePoint. I know, Sean, you covered ChargePoint a couple of times.
A few times, yeah. It's been down in the dumps recently, so I haven't really turned my attention to that. So it'd be interesting to see if they can post anything good, to be honest.
Yeah,
it's after the close, ChargePoint.
Obviously,
right.
Tesla improving their charging network as well. It's not helping them. So.
And also all those other companies, they are jumping on Tesla's network, right?
Exactly
you had so that puts a lot of pressure on these guys. But also, if you think about it, it's the end of the earnings season. Give it another 4 weeks or so, you will start having, again, the earnings season will start off for the fourth quarter with the bang. So you'll probably get like 4 weeks of a gap from here onwards.
Well, kind of a light earnings week. Yeah, so I'll just keep it rolling. Oh, Zscaler. Oh, okay, there's a name I'll look for on Tuesday with GitLab. All right, I feel a little better. Getting right to the charts this week, we've got SPY, of course, first up, and pulled back a little bit recently, and then had this nice breakout last week, breaking through the 444 level. Everybody's been talking about 444. I feel like I know I have, Sean. I know you have. And last week, not huge volume, excuse me, but a huge move, clearly breaking well above the 444 level. So I'd like to see that. And in 1 second here, get my chart squared so I can see it. There we go. And the 50-day, right? So that was at 445 and just bust right through that in the 20-day moving average. So all of those things were really positive last week, kind of cooled off towards the end of the week, which sets up for a bit of a mellow week this week as well, and trying to hold above the 450 level is kind of what I'm looking for. Even if we pull back a little bit from 451, it's trying to hold 450, almost more of a psychological level, if nothing else. RSI is looking strong, so makes sense of the fear and greed index is ticked back up into the greed side of things, and MACD also pushing positive for SPY. So yeah, I'm looking for it to hold 450 this week and trying to get back to 458 ultimately after breaking out of that downtrend that we saw. Sean, what would you add here?
Yeah, I mean, you mentioned at the beginning of the week we had a nice green candle. We actually said that last week, I believe, on last week's call. And despite QQQ, if we have a good move, it has to be big, strong, nice candle. And that's exactly what we saw. And I think that's really, really bullish for the markets going forward. I'm not saying we're going to 500 anytime soon, but we could certainly make our way towards there, of course. But I think in the next, a couple of months, maybe we can, by at least a couple of weeks, just to kind of travel sideways and just kind of calm down the markets a little bit. It's been very volatile this year, of course. But generally, yeah, of course, staying above these two moving averages and staying within this kind of 444 range and 458 range, I think would be ideal. Absolutely ideal. For me, anyway. I don't.
No, I like it. And I see we got a question on Tesla. I want to get to that here in a second. When we jump to the Qs, let's get on that. But Kay, anything on the options front looking interesting for SPY?
We
got you on mute, Kay.
Oh, yeah. Can you guys hear me now?
Got you loud and clear.
Yeah. So put to call ratio is 2.69 for this week, which is, actually it's 9.5, right? Yes, I'm sorry. It's 1.28 put to call compared to last week, which was 2.69. So seems to be bullish, but also it's a 4-day week, short week. So we'll see how, I don't expect a lot of volume that is going to, have gap ups, and we don't have any major earnings either. There's no major announcement coming up either,
right?
Unless I'm mistaken.
No, I think that you get that right. So again, probably kind of a mellow week. What were you gonna say there, Sean?
No, I was just going to agree. There's no major news or anything like that. There's a few things coming out of China, but not too bad.
Well, let's look at the Qs, because both the SPY and the Qs last week, I heard a lot of chatter about Head and Shoulders, so I kind of highlighted that here, and it did not come through, right? So this is just a reminder to everybody, and myself included, that you got to wait for these patterns to form and complete. So the way a Head and Shoulders pattern would complete is if we would have continued to pull back and then broken the neckline of the Head and Shoulders formation, which would have been around 360, maybe 358. I didn't draw that out here. I should have drawn that out. But yeah, long story short, it did not complete that pattern. So there was no trade to the downside, and it did the exact opposite. Like we've been noting on SPY, the Qs broke with a strong candle through the 50-day moving average, which is great to see. And now you've got the MACD turning positive and RSI in a nice strong spot. So regardless of the action this week, unless there's a major move, if it's just kind of a mellow week this week and we move sideways, no big deal. It's in a good spot and could set up for another move higher. That being said, I don't think we're out of the water. I mean, I'd like to hear your thoughts on this, Sean, with respect to the Head and Shoulders. I mean, it could still technically form here, right? But yeah, what do you think of the Qs? And then also, I'd love to hear what you think about Tesla. A question from Tuhawk about the Model 3 reimage and announced for Europe. And do you think that's going to be a nice positive catalyst? So maybe we can touch on that.
Yeah, of course. I'll obviously start off the QQQs that we've got here in front of us. And the Head and Shoulders, of course, it can still form. But I think with the big volume, big candle that we saw kind of breaking through that extra shoulder, shall we say, and staying above the 2 moving average, I think is really nice to see generally.
Yeah.
So I think that Head and Shoulders is actually not going to participate now. Bold claim, but it's just a little bit too high. I think a little bit too high. I know we had a red day Friday, and of course I could be wrong, but those 2 moving averages slotting on underneath, I think, is where you kind of want them. If you see what I mean with this pattern,
right?
No, I agree. You say, if we do have a quiet week and we can just maintain the position above these moving averages, that would be great. I think, and that's like kind of similar to what I said about SPY. Just kind of maintaining the strength, even if it's not, really, really strong, just kind of maintaining the position to going forward with strength at least. But yeah, and as to Tesla, I think, of course, it's going to kind of increase their reputation. It's a much nicer model. I don't know if you've seen the videos on it on your trailers. It looks very clean, very slick, as you would expect with an electric vehicle. But yeah, I think it would be a positive reaction. I know, obviously, it came down on Friday or Thursday, whenever it was released. I think it was Thursday. Came down on Friday, 5%. But it could be that kind of sell the news type thing, which I think is fair. You get that all the time within stocks. But once it kind of goes forward, and obviously Tesla, I think they've reduced their prices again in China, I believe. But they're doing that because they can. And they've got such high profit margins that it just makes sense to kind of lower their costs and have even more people buy them. And obviously kind of coming in with different competitors as well. They have to kind of lower their prices generally. But yeah, I think it's positive. Of course it is. It's an upgrade on their vehicle, in my opinion. What do you guys think just off the bat?
So I have not particularly seen the design of the car, but just looking at the chart for Tesla, and because I'm in the Tesla trade, I do think if you are planning to hold Tesla for a long term, and if you have a higher cost basis than what the price is, these are the times when it drops. And I think right now what ended up happening was when Tesla stock price ran from 257 to 299, if you take a look at the chart, there weren't that many support levels between that jump. However, the 257 seems to have been a decent support level and a resistance level for Tesla at the current point in time. Now, generally, when stocks are trading in a range, you will generally see between stocks forming peaks and troughs, and these are times when you should be adding to your portfolio in tranches. I love to add because if you're going to wait for Tesla to drop to 103, which happened earlier this year, that train might have passed. And as the most of the
out like I did, Kay, you just chicken
Tesla is up over 100%. So a stock of that size being up 100% a year to date, I think you may or may not get chance. Because see, what ended up happening last year was the overall market, S&P 500 was in a bear territory, right? That's why all stocks were down. And that's when you should have been buying more and generally people tend to not buy when the markets are going down. Now you are already in a bull territory for the overall market from S&P 500 or QQQ. Yes, it has dropped 5%. It's a correction. It's not a drop, right? It's not a what do you call? Man, I forget the word. Crash.
It's not a crash. Yeah.
Yeah, it's not a crash. So I personally think that these levels of 220 to 250 to 260 of Tesla, I think a good accumulation zone, depending upon your cost basis. Of course, if your cost basis is $50, you might want to wait. But for people who have a higher cost basis, I think these levels you should have at certain levels you should be adding Tesla into. Maybe I just ranted too much, but go ahead.
No, you're good, man. The 50-day moving average on Friday, we just pulled back from, which is right where you're talking, in the same range. 256 is where the 50-day is. And that is giving me a little bit of pause, but it could just be rolling over here slightly after the nice bounce it had, which was off of the 150-day and also off of the downtrend, long-term downtrend line. Broke through that and it's bounced off of it. So, I mean, we could be seeing 300 in Tesla in the next couple of months just as easily as we could see it pulling back to about 210. So,
exactly,
I agree with you that if you want to buy in, you take small bites and you don't wait for the perfect setup. Otherwise, you end up like me, just waiting and waiting. It's brutal. So I think it's a nice setup. Oh, one thing I will add to the Tesla conversation, they did drop prices right on the S and the X, and I started looking into that a little bit this morning because I like to buy them certified pre-owned, which is a fancy way of saying used, and those prices have come way down too. So if you're in the market for a Tesla, check it out.
I saw that the Model S came down from like 109,000 to 74, I think it is.
Yes.
That's a big car.
That's amazing.
Yeah, $30K.
For a good car. Really good car.
It's my favorite. It's my favorite car. It's my favorite purchase. Like, it's fantastic. I could not believe how much the prices come down. So it had me looking. I was like showing the missus, hey, look, the prices come down. She kind of rolled her eyes at me, to be honest.
she wants you to make a little bit more money on your trading, Nate.
Like, hey, how much did you make trading this week? I was like, it's a rough week.
80K?
Not quite 80K.
Yeah.
Yep. So anyways, all right, well, let's keep it rolling. We're talking Tesla. Let's talk NIO. Hand it over to you, Sean.
Yeah, of course. So NIO obviously reported earnings this week on Tuesday, and obviously the numbers, they weren't going to be great. We said that last week, and they weren't great. They were actually a little bit less great than what they made out to be.
You did warn us.
I did warn you, yeah. But of course, it was all about guidance, and we got great guidance, in my opinion. Good numbers, good deliveries. I think we're guiding for 55 to 57 delivered vehicles for the third quarter. And as you can see, I put them on the screen there on the orange table. As you can see, we've got 20, 462 and 19, 329, which is basically 40K, just under 40K in 2 months. So we're guiding really for kind of 15 to 17 this month coming in September. So I think that could easily be doable, if I'm completely honest with you. And just while we're here on this delivery subject, you can see that in the total, we've delivered 94,000 vehicles this year, compared to 122,000 last year. So we're basically almost there. Another couple of months, then we've beaten that target very, very comfortably. And if we're aiming towards the kind of, exactly right. And if we're moving towards kind of 25, 30,000 vehicles, and obviously that's going to be an incredible year. And it should be good news, at least in my opinion, for the stock price going forward. And the stock price, let's go into the technicals for this. So I've brought up the 2-hour chart. A lot of people talk about the long-term prospects of NIO, but I wanted to kind of take it back a bit, or take it forward, I suppose, actually, and go for a bit more of a short-term outlook. We can see that I've got a red arrow there next to the candle, and it's a big, big buying candle. Obviously, this was on the earnings day. It came right down. Obviously, people were anticipating poor earnings. They sell and all that kind of stuff, shake out the rest of people, whatever you want to call it. But they saw potential. They saw, the deliveries coming in, the words that came out of the conference call. And that's where you see that kind of been brought back up, and relatively quickly back up to that 1055 level, which we've been speaking about for many, many weeks now. And the important thing is we've come above that, and we've stayed above that in quite spectacular volume, especially on Friday. We had a nice move on Friday morning. And you can see on it doesn't really matter too much on the 2-hour chart, but we're above the moving averages here. And what I project is a nice move up to kind of that 200 moving average line. It's about $12, as you can see. And that's going to be a real test, in my opinion, because if you look back on the chart, it's kind of playing around that 200 moving average line. But generally, that's what I'm thinking here. We can just move on for the next couple of months and kind of really post those delivery numbers. That's going to be really, really good. Nothing I haven't really said before, but with a little bit more detail involved with this one. What are your guys' thoughts on this one?
The 1055 level is, yeah, it really stands out on this chart you've got here. And the bounce last week with these 2-hour candles, that stupid wick is what stopped me out.
I mean, I was looking on Twitter and loads of people were just going, I've been stopped out and all that kind of stuff.
Yeah, that happens, right? That's all part of trading. So there you go. But yeah, no, I mean, it looks like a nice setup from here off of that 1055 potentially. So I hope you're right and we get to push back to 12. Before, go ahead, Kay. What were you going to say?
And I'm saying because of that, also the implied volatility has like doubled. On Friday, the implied volatility was about 30% on the options chain, whereas now for next week and beyond, it's your 63, 65. It's in that range. So if you're trading NEO, especially in the option side, you probably will have pretty good premiums.
Nice. We know what we do when we have good premiums. We sell options, covered options, right?
Exactly.
I like it. Okay, so before we move on from NEO, Sean, I wanted to get everybody's predictions. What do you think about that? We getting predictions on the year-end total?
So there's a few people. I mean, are you going to talk to them, or sorry, have you got?
I was going to say last year we had 122, right? So what do we think we end up with this year?
Yeah, so for me personally, I'm sticking with the 2022. Even if it goes up to 30, 40 by the end of the year, I'm still sticking with it because I'm a loyal person to my predictions.
So that was your prediction, 122. Okay, got it.
No, 20 to 22, yeah, around that range, that $2 range. So I think that's comfortable. I think it's fair. I've got a big line on another chart that kind of follows it gradually up. So I think that's nice, especially if the company's growing, etc. And they can really turn it around. But people have been saying is the long investor, I don't know if you follow him on Twitter, he's saying 30 and he kind of does the Elliott wave thing. So I don't know if you follow him, but he's saying 30, but that's the only kind of real predictions I really look at.
Oh, you know what? And I'm talking, so these are chart predictions you're talking. I'm talking.
Oh.
Yeah. And I already asked you this because I couldn't remember. These are deliveries or orders in the top left?
Deliveries, yeah, deliveries.
So I'm talking deliveries. Let's make predictions on deliveries. Let's do it.
Okay, awesome. Yeah, so I think
have you made a prediction?
Yeah, so for this month, I think 20 plus, and I think we'll go 20 plus for the rest of the year. There is something coming out this weekend about the one of the guys at works for NEO saying basically he can produce 30,000 vehicles, but it's the sales team and all that kind of stuff that are kind of coming together to actually do that. In terms of production and all that kind of stuff, we can do it. It's just a case of doing it, if that makes sense. So the possibility is there. So you can make 30,000 vehicles. And now there's loads of people talking about 30,000 vehicles for September, which I don't think is possible.
So Sean, do you think it will cross the 150K mark by end of the year? Total delivery for the year?
Okay. Yeah, Sean's got to you got to be like 174. Put you down for 174?
At the beginning of the year, they projected 200,000, but I think because of the April and May, you can see their poor months. Yeah. They've taken that back a bit, and I think probably around about 180K.
I'm taking notes because football season started, and I'm in a gambling mood. So,
okay,
Sean, we got 180. What do you got, Kay?
Oh, I mean 150, 160. I would say I don't follow NEO that closely, but I would say 150, 160.
I'm gonna put you down for 155.
Okay.
And then I'm gonna go a little bit lighter. I'm gonna actually, Kay, you're probably right on it. So I'm gonna go 140. I'm gonna go 145.
Okay.
And I hope I'm wrong, and I hope you guys win.
Hopefully, Sean is right. I would really say that because what I will do is I will roll my covered call to get more premiums.
There you go. All right, cool. I couldn't help myself. I'm in the mood to make some predictions. So, all right, Sean, I'll hand it back to you. What do we got next?
So next up, we've got Airbnb, and I don't know if you heard the news on Friday, but they've been added to the S&P 500, which is always a big deal for any company. There was another company as well that got added to it, but this one's the only one that took my eye, to be quite honest with you.
Very nice.
Generally with Airbnb, well, not, but with stocks that get added to the S&P, they have a short-term kind of pump, maybe, because obviously they're being added to all the index funds, so the volume comes in, they kind of basically have to buy it if they're buying an index fund. So that's exciting for the company, and I think you can see there the pink line, that's where they close in the after hours. Obviously, you can't see that now because that's not the chart I have. So we're above that 200 moving average, which is really, really nice. If we can stay above that, come back down and retest it, which is why I've got the two kind of projected lines for the other moving averages. So you've got the yellow one, which is the 20, kind of coming up. That will come up really fast, of course, because of the jump in the stock price. The 50, not so much, but that will kind of trail behind it. But what I'm really looking at here is kind of a push to 144, because that's where I can see the previous resistance lines going back on the chart as well. You can't really see it on here. But push up to 144, come back down and retest that kind of 220 at the same time. So you see what I mean? That the yellow one will come up to the red one and add that kind of confidence. If that makes sense. Are you with me? You look confused.
I'm with you. No, I'm looking at. I was pulling up charts on the side here because your after hours close. I couldn't believe it pushed up to 140. So like I'm effectively over here going, is this real?
Yeah, exactly.
On the side. I mean, what a push. And that's a great ad. I mean, that's why. And I don't know about you guys, but I would expect that more buying to follow typically when you get an ad to an S&P like this.
I'm rolling on from that. If you're watching this, I've got two links down below in the description already. One of them is related to Airbnb's financials, and which is basically the reason why they're in the S&P 500. So go ahead and look at that. It's a really nice kind of visual look at their fundamentals. You can really see how they're performing as a company, and it's going really, really well. Of course, we've spoken about that before on here. And the other one is about the kind of inclusion to the S&P, what it entails, what it includes, how it happens, why it happens, that kind of stuff. It's an article based on that. So if you're looking for a little bit more information around about those subjects, then obviously go ahead. But generally, a push to 144, I've got to summarize, a push to 144, come back down, retest the kind of two moving averages, and then move on upwards to kind of that, 154 line would be amazing. And that, I believe, is 11%. I did it earlier, but I didn't put it on the chart.
Nice. It's gapped up over the 50-day moving average, just to add that in here. So yeah, that'll be a great stock to watch next week, in my opinion.
Right.
Nice chart, Sean.
And also, if you take a little bit of a broader view, you will start seeing that it's making higher highs now. Before that, the high was about 144, then you got 154. So if you can go above 154, you'll make a higher high, and then you'll be in a uptrend.
Yeah, and I think, just to add on to that, I think people think that once it's moved this 4 or 5%, they've missed out on the trade. It's not necessarily true. In my opinion. Just as long as you have the right risk management, you do the right analysis and learn about the trade that you're about to enter, you have half a chance of making more money than you thought. Yeah,
the chart this year really is looking good for Airbnb. You called it, Kay. Higher highs and higher lows. That's really nice. Yeah. Dang, I've been a hater, so I'll have to reassess and get on board. Nice chart, John.
Awesome. Yeah, and that completes my set, and obviously I'll hand over to you. And we'll
talk about you got AMD? Yeah. That's nice.
I got AMD.
Okay.
You're on the AMD train now. That's good.
Well, maybe somebody was talking about AMD and was like, I should probably look a little closer at AMD. And so here we are looking at AMD. So to me, what jumped out is this downtrend, right? That we've got the channel, and possibly we've talked about this, and bounced off of my favorite moving average, 150-day, which is right at the bottom of the downtrend as well. And also at the key level of $100, right? Psych level, but also happened to be prior resistance, broke through it, now retesting. So it's a really nice setup here for that bounce to continue higher and break out of the channel. So that's what I'm looking for. That's the dotted line drawn there. We're still below the 50-day moving average with AMD, but I am bullish on semiconductors overall. I've been talking about NVIDIA quite a bit, and I like the potential here for AMD to break out. So, Kay, going to you first. What are your thoughts looking at the chart, or do you have anything to add to AMD this week? Because I know I definitely have swiped this out right from under you.
Yeah, no, this is amazing. I think AMD is one of the stocks that I really like from a range bound standpoint, and I think it will be interesting to see if it can break your trend line, or it will come down. And that's why I think the $100 range, and that between the $100 and $115 range is the range right now for AMD that I tend to trade in. So if I'm using a wheel strategy on the option side, that's how I get in and get out. So I'm not trying to like swing for the fences where, let's say if I get AMD at 103, I want to sell at 113, I would sell at the money or a little bit slightly out the money, just a little bit. I'm liking these levels, honestly. And I just completed an AMD trade last week, and my options expired worthless. So guess what? The premiums were, 100% profit. I'll probably get into the trade again. Most likely it will be rejected from the trend line. I'm hoping it gets. If it does, then I'll just have to make sure that I'm keeping enough gap between my entry point so that I can get the expiration worthless again for next week.
Yep, nicely done, by the way, juicing those premiums, because you get 1 or 2% a week, you get 50 weeks in a year. You can do the math; that adds up really quick.
Exactly.
And, Sean, go ahead.
Yeah, go ahead. No. I was just saying, yeah, exactly. Because you know what, you don't need to get 2, 3, 4% a week. Even like anything above 0.5, 0.7%. 0.7% is like my cutoff. That's what I look at. If I can get 0.7, 0.8%, anything above is like a bonus for me for the week. Nice.
And do you usually go 1 week out, or you go multiple weeks?
No, just 1 week out. So 0.775% for the week. And if I generally have like 6, 7 trades like that, that's a decent percentage, that total percentage you can, collect for the week.
Yep, I like it, because I try to aim 2 to 2.5% across 3 weeks. So there you go.
Yeah, same thing. If you're doing 0.7% for 1 week, and if you go 3 weeks out, it's the same thing. It's less of a headache for you to keep getting in and out of trades.
Yeah. Sean, what do you think about this chart? Anything to add?
Yeah, so funny enough, I actually did a video on this yesterday on my channel, highlighting a trade idea, which is very, very similar to what you've got here. So I've got the trend line coming down, so the top green line that you've got on this chart. But I've also got a trend line going from the lowest lows, you can see kind of on the left side of the screen, kind of following all the lows up. And it kind of comes into a wedge on my chart. But generally, in terms of the position I've been taking, or I wanted to take, is if we break this trend line in a positive fashion, move up to kind of 116, I have it on here, 116, 117, come back down, either test the trend line or test the 20 and the 50, which you've got on the chart here as well. Obviously, this is highlighted in a bit more detail. I'm talking through it now, but if you wanted to watch the video, obviously head over there. But just like we're all covering AMD now.
Yeah, check it out. That's right, Sean. I remember you in your video now talking about we're running out of room, right? I think that's what I remember now. So I think I am just subconsciously stealing from you guys, and I hope you take it as flattery, because that, I think, is what's going on. So yeah, check out Sean's YouTube channel if you haven't already. Go subscribe to that and check out the AMD video. It's good stuff. I do remember watching that now. And good segue here to also say, don't forget to subscribe to Invest for Tomorrow as well, InvestK, and then also to our channel here, the Trading Triangle. Smash the like button. Hopefully you're enjoying these charts so far today. But yeah, Sean, good to see we're aligned on a potential breakout here for AMD. I like it.
Just goes to show how good of these stocks are.
Right? I mean, 3 out of 3. AMD got 3 out of 3 here.
I just wanted to add one more thing as well. It wasn't quite finished, but if we come back down and we test those moving averages and then we move towards that 130 level, that is actually 18%. Just because people like numbers, they like to hear the percents that you could possibly make. But this is obviously, it's not financial advice. It's just to kind of put it out there that it is 18%. So you could actually swing trade that fairly comfortably with a fairly low risk trade, in my opinion, of course, with shares. Obviously not options. I'm not too sure about that. But
yeah, no, that's good. I love that. Putting the numbers to 18%. So thanks for that, Sean. All right, good stuff. And keeping the charts rolling. We've got a couple of energy charts here, and I jumped in with Schlumberger. I also wrote my newsletter this week about the energy sector. Talked about Schlumberger, also the energy ticker XLE for the ETF, and lastly, I had, Apache, APA. So check out the newsletter. I got the link in my bio here on Twitter, and then you can find that link below here, and I'll stop plugging and get to the chart. So Schlumberger, we're back up to the 59.60 level here that we were at That was the January 2022, I believe it was, and formed this huge cup kind of pattern, got back to that level, pulled back, and formed the handle right on the right hand side here. So pretty well known pattern in trading, and it's one I actually like. So the head and shoulders is one I don't like because I tend to not really trade it well, quite frankly. It doesn't tend to play out the way I think it will. Cup and handle, on the other hand, I've seen work out a number of times for myself pretty well. So here I'm looking at 59 to hold, which is also right around where the 20-day moving average is at. And if that can hold, we can push higher for a breakout. It's looking good to push all the way up to possibly 65. That being said, I wouldn't be jumping in here full boat just yet. I want to see that pullback and hold of 59, and maybe this week with the lighter trading week, that's what we'll get. It'll allow the 50-day to kind of come up a little bit, and RSI to mellow out right near the top of the range here for RSI before we get into overbought. So that's the setup there. What are your thoughts, Sean? Do you like this in as far as a potential breakout?
I do, yes. I've actually just written it down in my note,
right.
in my notebook, and I like it. Retesting that 159 level would be key, absolutely key. And
Yes.
at that kind of point, you might have the 20 coming up at the same time, so it'd be double confluence there. I was just going to ask, where would you be putting your stop loss? Because I'm thinking around about just under the 50 if I'm looking at a longer term trade, under the 50 moving average. Obviously, that'll come up a little bit more, which would be nice, and maybe just trailing up with that. Where would you be looking?
About 5%. So let me actually, because I noted it and I don't have my notes up. So
Is that your standard stop loss that you put 5%?
Yeah, give or take, because I'm usually swinging for about a double-digit return and higher. So 5%, about half of what I'm aiming for as far as a price target, profit targets. So how about you, Kay? How do you do that?
Oh, similar. Yeah.
Yeah, about 5%.
Yeah,
Do you go more off the chart and looking at points on the chart, or do you use percentages? Or
no, I only use percentages. So depending upon where I'm entering, I'm just put a 5% stop loss.
What about you, Sean?
Yeah, I use the chart. I tend to go into smaller time frames, to be honest. I go into 2 hour, 4 hour to kind of get the kind of moving averages, see where they are, and kind of dive down into kind of support lines that way. Just because I like to kind of enter in and out a bit more, I suppose, with day trading. If it's a swing trade, I'll just have it below the 50 and just leave it there probably for a couple of weeks, let it mature, and then probably reevaluate my stop loss. Because if I'm going trade, I'm happy to lose that straight off the bat.
Right.
So you plan to lose that money essentially, haven't you? But yeah.
That's exactly right. Go ahead, Kay.
Can I add one thing on this stock? I don't know if you guys have noticed, but this stock in last 1 year was up 63%. The stock was trading at $36. It's what, $60? And you will be surprised how many analysts cover this stock. You have 31 analysts covering with 17 strong buy, 11 buy, and 3 hold on this particular stock ticker.
I think I said January 22. I meant January 23 earlier. But yeah, that's quite the round trip here it's made.
Wow.
So reading directly from the newsletter, just so I can be consistent, I posted that I would use 57 as my stop loss, Sean. So it's about 5%, and I'd be targeting profit taking at 63.72, and then again at 65. So there you go, direct from the newsletter, everybody. And I agree. I go into the smaller time frames. I actually jump into the 10 minutes at times. I go as small as 10 minutes. So, all right. Well, let's keep it rolling, and I'll hand it over to you to Kay. I think we've got another energy name up next.
Yes, this is the ExxonMobil, and we are loving ExxonMobil. Why? Because we had a similar gap up a couple months ago. As you can see, that was a very big gap up, and then we saw that it ran for a couple days in that range until it hit its resistance at 116, and then the stock kind of slid down and started forming a different peaks and troughs at different levels. We had a similar gap up right now over here. It's not a major gap up. It's a very small gap up compared to the previous gap up that we had. So I don't expect this stock to continue to break that 116. I don't really see, but generally with energy prices, as the as the demand goes up and the supply goes down, commodities are very difficult to price out, and especially with so many things happening. One other thing that could increase the energy prices that we are hearing is also related to the Ukraine war. So, as I don't know if folks are following or not, but apparently Ukraine had a success in breaking through the Russian defenses. So whenever those kind of events happen, generally, you will end up seeing a big impact on the energy prices as well. So I'm not sure if it's going to play out that way or not, but you could also play this piece out. If I would be looking at, I would probably see that it should be able to go in the upward trajectory, and probably 116 will still be a good resistance level until we see some major announcement of cuts by OPEC and OPEC plus. Unless that happens, I don't really see it's breaking 116, and it probably will again slide back to its current levels, and it probably should be in the same range. That's what I'm looking at.
You're looking to trade the range. That is very K of you.
Yeah.
I saw the same candle last week across the energy sector. This massive gap up and just like a rocket launching, right? And that's definitely keeping me bullish in energy. It's 2 weeks in a row I've been kind of focused on energy here. So I agree with you, Kay, and that's not a bad idea. If we could get a range there, I would definitely trade that with Exxon. You get pretty decent premiums in the name as well. And it's the largest holding, I think, if not the large. I'm almost positive it's the largest holding in XLE. So as it goes, XLE goes.
Yeah. It's for any viewer, if you want to understand how much premium you get. So on a good week, if you have a full 5 trading days, generally you will get about close to $100 on one contract as a premium. That's pretty good.
Yeah, that's a solid percent, basically. Yeah, that's really nice.
Sean, what do you think? What are you looking at this chart?
I'm thinking about the trade that I missed at the beginning of the week. I wrote it down from last week, and I had it 109 as my entry and 112 as my profit line, but I completely missed it. And as you can see, it played out.
Yes, exactly. Perfectly. Yeah.
And I'm just sitting here looking at thinking, what an opportunity that was. But generally, I like the gap up, and I like the fact it's got to, hopefully, consolidate through these areas like we've seen it in the top left-hand corner of this chart already. So, yeah, it's a range stock, and it's not one I'm going to watch. I think I'll watch it, but I won't trade it.
By the way, I did add the last ticker to my what was it called? Slumber, right? SLB.
SLB.
Yeah. I added that as well.
I don't think I mentioned the ticker. Yeah, it was SLB. I like that one a lot. And they're, if I'm not mistaken, they're really leveraging tech to get ahead in the industry. So, yeah, pay attention to Schlumberger. And ExxonMobil is a definite leader. I'm loving Sean's comments on the trades. We were talking about that earlier, Sean, where I think I said like 90% of the trade setups that I review and talk about, I miss because I'm just so busy, can't get after all of them.
Mm.
But you shouldn't be getting against all the trades. This just goes to show that there's just so many trades you can take regardless of. You just don't have one or two stocks. As you can on this channel, as you can see, all 3 of us bring us so many different types of tickers, and we discuss. And you have opportunities across all types of tickers. It doesn't have to be just Tesla or just Apple or just Amazon or something like that. So many types you can take advantage of.
Right. Respect the stop loss and get into a new opportunity.
Yeah, and have the discipline to not chase as well. I think we add on to that at the end because I could have easily chased this at 110, 111, and it could have very easily come back on me. And I stuck to my guns and obviously didn't win this one, of course, but it's how trading goes.
Yep, no, I like the discipline.
Cool. Let's move on to the last one of the day. Last one of the day.
All right.
Okay, this is GitLab. So if anyone who has been following us, we did a similar prediction, or not a prediction, but we covered GitLab before the last earnings call, and you saw this. We had this massive gap up. Now, generally, when GitLab does a gap up, you're looking at between 17% plus minus to 20% plus minus. That's generally how it happens. Now, if there is any indication in the SaaS software space, how all the SaaS softwares performed last week, if that is an indication on how GitLab is going to perform, and you can see that the EPS loss last earnings was 14 cents. They're expecting a 3 cents EPS loss, which means that the company is getting closer and closer to profitability. You know what that means? if they are able to bring it to 2 cents or 1 cent, this stock could gap up all the way going, I would say could even go up to $61. That's what I am targeting for next week. And you know what? I might.
You take
This is a gamble. Yeah, this is the gamble, by the way. This I cannot predict it, right? Earnings are a binary event. You cannot predict. I would be looking at opening calls. And you don't have much time because Monday is a holiday. So no trading on Monday. So you only have Tuesday before you buy anything. So especially in the options world, you have to buy before the market closes. So that would probably be a gamble. Full disclaimer, I'm not recommending to get into a GitLab trade. Personally, for me, I would probably open some calls on these.
Nice. I like
at 61. Yeah.
We got the earnings Tuesday, looking for a big gap up, looking for a big trade. Yeah, let's see it. Why not, right? What about you, Sean? What are you thinking here?
Yeah, I like it. I think, like you say, it's a bit more of a gamble, this one. So obviously, be careful if you're kind of looking at that as an option. And I must admit, the last time I did this, I mean, viewers will know if you've been here for a few months. I did actually play this earnings on the last report, and I was very handsomely rewarded, and I thanked KAYE very much for that. And that was obviously a very small amount, but it went up 25 or 27%. So of course, it's kind of multiplied massively. And I held it for a little while as well, and you can see that kind of went up to kind of 53. I think I actually took it about 51, so it didn't quite get the whole gains, but. Yeah, I'll put a little bit more on this time because it's just who I am, and it worked out for me last time. So if I get burnt, I get burnt, and that's trading sometimes. But obviously, if you're in any position to think about hesitation or anything like that, you should not be even thinking about this, in my opinion.
So this, for me, plays into nicely to what I want to talk about at the end here too. So I'll get to that. But if you get another positive earnings call, you get quarter over quarter strength and improvements. That's exactly what you're looking for, right? And we're in a market that is trying to move higher and maintain a bull market rally. And you find stocks like this, and if they do beat quarter over quarter, people are going to pile in potentially. So I like the potential on the setup, even if you were to get the big gap up, to potentially hang on for a few flyers for additional upside.
Yeah,
so it held nicely last time, right? It did help.
Yeah, and just if anybody is planning to buy calls, don't buy a weekly call on this one, because if the next day there's a selling pressure, your because of the implied volatility will crash, and theta decay will come into the picture. So take a month out or 2 months out. So you might have to pay a little bit more premium on the gamble, but if you are going the call route, or you can do a credit spread if you want. But I would recommend don't go a weekly call because you don't have enough time for the call option, and you probably won't make money. So there are if you're going the option route, if you're buying stocks, then that's a different thing altogether.
Yep. No, well said. I tell you what, I love trading options. There's so many different ways to do it and opportunities. We could talk about it for a day and still not get through all of it, right?
I know you can.
I know Sean hears us all the time. So yeah, maybe if you were looking for more of that education, no doubt Kay and I are going to be writing about it on our, X. I keep on calling Twitter, so sorry about that. X. Follow all three of us. You got @TraderNate here, @Sean Clark, and @InvestK. Also, check out the other YouTube channels @Sean Trades and Invest for Tomorrow. And then here, thanks for subscribing. If you haven't already, be sure to subscribe to the Trading Triangle. And thanks for joining us every single week here. Let's get to the wrap up, guys. It's going to be a short week, but I'm looking forward to it. I am actually in a spot too now where I'm really excited about researching the fundamental side of some growth stocks, like I was mentioning with what was it, GitLab, that you're going to have these companies that are going to start coming around and getting positive earnings where they were just kind of making noise in 2020, 2021. A lot of those guys sold off, but there's names that are going to emerge, right? And if you can identify those names and get in with good solid fundamentals, get in a good spot using your technical analysis and combine all of that, we could be in a really nice position for a continuation in this bull market rally. But nothing's guaranteed. It's just I think it's worth taking some time to look at those opportunities and be ready for them. And for when those setups present themselves. So that's where my head's at. Feeling very positive going into a short week for the longer term, and kind of, we'll see how this week goes and see what opportunities come up in the short term. So I'll hand it over to you, Sean. Next, what are your thoughts as we close out?
Yeah, so obviously we're closed tomorrow on the market, so it's a good opportunity if you're not doing too much, you're having a bit of a quiet day, just have a look through your trades, do a bit of research around your trades, go over your rules, kind of back testing, that kind of thing. Maybe have a look at another strategy if you've got time. Obviously that's going to be quite a long one, but maybe start some thoughts around that. So just kind of think about your day off and use it wisely, basically.
Yeah, I like it. How about you, Kay?
Well, first, like and subscribe to our channel, and make sure you just watch us every single Sunday. One of the reasons is because you can see that there is a lot of different points of view that we bring on the table, and that helps. And I also recommend watching other YouTubers and other analysts that are there, so that helps you get a good idea. There are a lot of tickers that we talk about. These tickers could also be used in your long-term investing. So take that and enjoy and learn every single week. Try to learn something new, improve yourself, even if it's 0.1%.
I love it, guys. This is good stuff. Hope everybody enjoys the time off tomorrow from the market, whether you're studying the markets or just taking time away. Enjoy it. And thanks again for tuning in to the Trading Triangle. We'll catch you next time around. Have a good week, everybody.
Yeah. Take care.
Take care.